Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a quick look at the Aussie versus US dollar as we head closer into the weekend. In trading this week in the currency pair, we moved up to this area here on Monday. Monday was the high actually for the week, and it was just barely above the closing price from Friday's trade. Moved up there and then started to rotate back to the downside on Monday. We had a lower high compared to the Asian session right here, and things started to unravel to the downside. On the downside, we were able to get below this lower channel trend line, I guess, and the momentum to the downside, though, failed at the 63.63 level, and we started to see the market rotate back to the upside on Wednesday's trade, getting above the 100-hour moving average in the process, but running into resistance against the topside channel trend line. That forced the market to the downside, and as you can see, we tried to stay below the topside trend line through here, but by the close on yesterday's trade, the price had moved above that level, and we saw increased buying into the Asian and to the London session. That was helped by holding of the underside of this trend line right here, so the buyers had their shot. But where did they fail? They failed to get back above this swing area right here, and also failed to get above the falling 200-hour moving average. So although the buyers were making a play, they could not follow through and get above the next technical levels to get this pair outside of the what is the bearish quagmire. So subsequently, the price has since moved back below the 100-hour moving average. That's being helped by lower stock prices. We're seeing pairs like the Dow Industrial Average now down 252 points. The NASDAQ index is down 26 points. So we are seeing a risk-off type sentiment, which was a little different than yesterday's trading action, but it seems like the trend of stocks moving down, the Aussie versus US dollar moving down today, again, today is back in play. So from a technical perspective, of course, we move back into this channel, which is more bearish, and we move back below the 100-hour moving average. And we're down testing the low price from Tuesday's trade. Get below that level, and the door opens up for a test of the lows for the year at 0.6362. And also the lowest level going back to 2002. What does that look like? Let's take a look at the weekly chart. And in trading this week, what we saw was the price move below the 61.8% retracement of the range since the 2020 low to the 2021 high. That 61.8 comes in at 0.64615, and the price moved below that level and looks like it's going to close below that level. Going back to our hourly chart, this is where that 0.6165 level is. It's right near the 100-hour moving average. So that increases the level's importance going forward. Not only do we have the 100-hour moving average there, but we also have the 61.8% retracement off of the longer-term daily chart on the on that daily chart. So this is going to be our key level going into the new trading week and going forward. As long as the price can remain below that level, the bias remains to the downside. If we move back above it, we'll give the benefit of the doubt, at least in the short term, okay? The short term to the buyers with work to do. That work to do would be to stay above the 100-hour moving average in the 64.61 level. That's step number one. Step number two would be get above this swing area and also the falling 200-hour moving average. Those levels need to be broken and stay broken for the buyers to take control. Absent that, and it doesn't take a genius to look at the Aussie versus US dollar and see that the bias remains to the downside. So we've defined our risk, we've defined the bias, we've outlined what needs to be done for the buyers to take more control. They couldn't do it this week. We'll see what happens next week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.